All right, there we go. All right. Hey, what's up, everybody? Welcome to December 17th's MakerDAO community call. My name is David. I work here doing community development at the Maker Foundation. And so I help host these calls. We do them every Tuesday, and we use them for a couple of things. So they're actually a really great way if you are a fan of the Maker protocol, just to get like a brief roundup of what's been going on for the last week around the Maker protocol. So we cover a bunch of stuff every week, ranging from like governance, what's going on in governance, partnerships and integrations, things that we've posted from our own blog, from the foundation's blog, highlights from the community, developer creations, articles, notable threads, you name it. And so we try to cover all of the stuff that's been going on in the last week on this call. And also, we every once in a while have some really cool guests that are doing really cool work in the space come on and do demos and live Q&As. And so this week we have Leah Schmitt from Centrifuge Tinlake on the call, and they're going to demo something really cool. So if you've been a fan of the Maker protocol, and like if you've been thinking about what the logical future for the Maker protocol is, and where we're headed, I think you're familiar with the idea of getting real world assets on chain, and Centrifuge Tinlake are doing some of the most foundational work in that regard. So without further ado, I'll let Leah further introduce herself. And I think Leah also brought on one other person whose name I'm blanking, but I'll leave that to her.
Okay. Yeah. Yeah, maybe I can quickly say hi. Hi, Leah here from Centrifuge. Happy to talk about what we do at Centrifuge and then also explain what we've done so far with Tinlake. And I hope, Lucas, you're also on the call. So our CEO, and maybe he can quickly give an intro of what we've been working on, and then I'll dive into an example and a little demo to make it a little bit more tangible.
Awesome. And in the meantime, I'm gonna quickly post the agenda for the call here, so you guys could get links to anything we talk about, and also feel free to post your questions in the chat and interrupt us if you're curious about anything. So yeah, sorry about that. Go for it, man.
So David, should we start right away, or do you have anything else you wanted to?
Yeah, the whole first half of the call is dedicated to you guys.
All right, then I'll start with like brief introduction of myself. Thank you, Leah. I'm one of the co-founders of Centrifuge, and I've been working on Tinlake and like very closely with what you guys have been doing with Maker for like over a year now. I think it's been like an ongoing project, and I want to just give a very brief introduction, but we'll talk mostly about sort of use the example of what Paperchain's been doing with like getting streaming royalties, so invoices for streaming royalties into Maker as collateral, and just in general, like what are some of the needs for real world assets, and specifically like real world loans that we want to tokenize, because those can be really attractive US dollar stable collateral. So what we're going to demo later, what Leah's going to show is what we call like Centrifuge Tinlake. It's a system of smart contracts that sort of acts as a set of tools, as a system that can help bringing these asset classes into Maker. And so the asset class we talk about here is specifically debt. So if you think of invoices, you have a borrower that has an invoice by a buyer that's going to be paid in 90 days, and you want to get money for your invoice already because you need to pay your salaries, you want to grow your business and reinvest this as soon as possible. So what you would do today is you typically go to a bank and you sell them that invoice, and they give you this money, and you get your cash faster. So that's like one category, but we've also been working with a few others, real estate, fix and flip mortgages, and sort of this really can be applied to any kind of sort of debt. And this debt typically behaves slightly differently than your like run-of-the-mill ERC20 token. And like sort of one of the core issues and where we started with developing Tinlake was these different loans have vastly different credit risk, right? So if you have 20 different CDPs or vaults open where ETH is the collateral, you always, like, the risk of all of these vaults are largely the same, right? But if you have 20 different borrowers that have a loan for their house, or that have different invoices to different companies that are paying these invoices, and those don't have the same characteristics, you can't just put them in the same basket. And so our loans, and so for example, in the example of PaperChain, the receivables that PaperChain tokenizes are actually our NFTs. And so for what we need for Maker to be able to work with them efficiently is something in between these individual NFTs and the Maker governance system that can then, like, whitelist these set of assets, these asset classes, and allow them to be worked with in the way that scales for the kind of governance that Maker has. And so we want to avoid that. Basically, you'd have to have a situation where Maker would have to decide over every single NFT whether that should be added or not. And so Centrifuge Tinlake is just that. It allows someone to put together a list of category. So in the example of PaperChain, PaperChain is saying, we originate these kind of assets. We have these music labels that want to finance their receivables, their invoices to the labels that they use to get paid for the streaming. And this is how we do it. We'd like to get this group of collateral into Maker. And so Tinlake, essentially what it does is it allows PaperChain to aggregate a list of loans as NFTs, and then issue an ERC20 token against it that sort of represents a share in the entire set of loans that can then be used as collateral.
So Lucas, tell me a little bit about that ERC20 token. They're called CVTs, right? They're called I forgot what CVT stands for a quick second.
So basically, yeah. So the token we mint is we've called it CVT in the past. It's CVT stands for collateral value token. Essentially, what it is, it's a token that represents a fraction of the collateral that is deposited in this Tinlake pool of assets. So Tinlake is a set of smart contracts where each individual loan is being deposited as an NFT. So if you have 5 music labels that have 5 invoices, there are 5 NFTs that this Tinlake contracts hold in escrow, and then these Tinlake contracts mint this ERC20 token based on the value that is in those NFTs. And so when we then deposit this ERC20 token into a vault in Maker, that then the Maker keepers or anyone that owns this token basically can then use that token to get a share of the loan, the outstanding loan, to by those initial borrowers that deposited the NFT.
Maybe Lucas or David, is it possible that I share my screen? We have a high-level graph that sort of summarizes into like one quick picture.
Visuals are always helpful learning tools.
Okay.
So for sure.
Let's see.
While you're pulling it up, so I'm assuming CVTs are fungible, right?
Yes.
Yes, they are.
Yeah. Okay. Are they fungible per like Tinlake instance, or like no matter how many instances, it's always going to be like the same standard CVT type token?
So no. So the thing with if we think of the kind of assets, right? Like PaperChain is using streaming royalties, and then there might be another company that is doing real estate in residential real estate on the East Coast, and those two would be 2 deployments of Tinlake. Where that have vastly different risk profiles, different returns, therefore should have a different stability fee in Maker, different collateralization rate, different debt ceiling, and also a different ERC20 token that is used as collateral. So those are independent. Like the token is a specific set of assets, and so in this example, it's all of PaperChain's assets.
Got it. So you see like instances of Tinlake like supporting various like asset types, right? Like maybe you'll have a Spotify loan type and a title loan type, and like all of those can kind of fall under a similar risk category, right? Is that kind of the right way of thinking about it?
Yeah.
Nice. Okay, cool.
Maybe Leah, you wanna walk briefly through the
let's do
through
it.
the example. Actually, we can jump right into the demo. I think it's a good idea.
Yeah, maybe that makes sense. So, I mean, like here, so I guess everybody can see my screen. Okay, so that's basically what Lucas has been saying. This depicts the infrastructure that we've been building. So on the one side here, you have the NFTs that represent real-world assets submitted to Tinlake smart contracts and bundled into a portfolio. Based on that, ERC20 tokens are minted, which then are locked into Maker Vault to draw DAI.
So using Paperchain as an example, Paperchain would be like the borrower who's connecting the client of the loan from like Spotify. They'd be taking that 60,000 of future revenue upfront and paying some amount of percent on it. That loan would be issued as an NFT. The NFT would be then used in Tinlake to create a CVT ERC20 token that represents like dollar slices of the share of the value of this NFT or group of NFTs, and then that can be used as collateral, right?
Correct.
Yeah, nice.
And maybe I pulled it up. I mean, like Paperchain was talking about it last week. So basically, for those who have not been on or not familiar with Paperchain, they are a company that transform media data analytics into revenue insights, and then allow, they create synthetic receivables and allow, therefore, artists to get paid earlier. And the problem that they're solving is that the music industry is quite convoluted, and while the music industry, or basically in general, entertainment industry has shifted towards streaming and on demand, which has changed a lot. The payment infrastructure actually has not, and usually from a Spotify stream to from the stream to then the first payment, it usually takes 3 months until it reaches the label, and then until it actually finally reaches the artist, it's mostly 6 months. So what they do is here, you mentioned it earlier, David. So they have different sources where they source their data to generate insights on future receivables, and this is basically how Paperchain processes that data and runs a risk analysis, like how much they will receive, and those insights we tokenize. We minted an NFT. Here you can see they got a token ID, and then we took that NFT and financed this with via Maker using the Tinlake infrastructure. And I can actually show how that works. So we have a really simple demo environment. I can share that link afterwards. Here in the chat, maybe. Okay. So this is a really reduced UI for our to showcase how it works.
So we're going through the demo from the perspective of somebody who is a borrower who is trying to tokenize a loan, right? Yeah.
So I mean, this is the dashboard. You can see how much, like in the Tinlake pool, how many ongoing loans there are, what the outstanding debt is, etc. But basically, what interests me as a borrower, I did that in advance. I already minted an NFT, and I submitted an NFT to Tinlake, and I can here have a look at it. So here are my different assets. They're listed. For example, here I already took out a few loans, and these are the NFTs or the assets that I submitted and that have been undergoing a risk assessment, and they are whitelisted already. So at them, I can only use that NFT to borrow against and when it is whitelisted. So I can take a look at, like, this is a really simple NFT that I created for the demo purposes here. Here, make a community call. The invoice amount is $1,000, and I here got a risk assessment. So these are sort of the parameters that I received. So the appraisal amount is it's valued as 1,000, and I'm allowed to borrow like 900 DAI. Like this was the collateralization ratio that was set. So I hope it works that you can see my MetaMask. I have sometimes a problem when I share my screen that you can't see. So I'm connected. Like here, this is on colon testnet. So here I'm connected as the borrower. Again, this is my dummy DAI balance. And when I now go to borrow, this is the maximum amount that I can borrow. When I confirm, a MetaMask pop-up just opened. I hope you can see. I have to now confirm that the ownership of this NFT is now transferred to the Tinlake escrow contract. So while I use that NFT as collateral, I do not have access to that NFT anymore.
Mm-hmm.
So
because
I can
it's locked, right?
Yes.
Yeah.
I can show the Etherscan.
Just to make sure I'm following along correctly, right? Like in using the paper chain example again. So this would be an invoice or like a payable promise of like $60,000 that you expect to arrive in 90 days, but you just have the invoice and you put up the invoice, and based on what you guys do at Centrifuge and Tinlake, you guys put it through a risk assessment, give it an interest rate, give it a loan to value ratio, or in other words, a collateralization ratio, and then they can, or whoever it is, maybe paper chain is the intermediary, but they borrow on behalf of the client's amount and then send them this borrowed amount as the forwarded revenue, right?
Right.
Yeah, cool.
So I can actually see now here. Let's see who followed, who paid attention. But like now, it's the amount is deposited to my MetaMask, and maybe actually I can show. What happened in the back? I don't know, Lucas. Do you wanna?
Yeah, I can maybe give like a bit some background on what happens, right? So when the borrower wants to borrow money, what we do is we take the NFT and we move it into the escrow, which is like the last line, the token transfer. This which is the borrower address to like the escrow contract from Tinlake, and you see that this Tinlake Play token, this TPT, that's the ERC 721 that we used as this as collateral, and then in addition, there are basically four transactions happen here. We mint the CVT, and the CVT then gets moved into a wallet. In this example, it's just a simple wallet, but if this were to be used with Maker, this would be moved into a vault, and then again here we just take 900 dummy token. So instead, what the Maker system would do is it would mint 900 DAI, and then it would move that first into Tinlake, and then from Tinlake to the borrower. And so you can see that basically we take the CVT token, we give it to the Maker, and we take the currency. In this case, it's some dummy token, and it could be DAI. We take the DAI that gets generated from that, and move it to the borrower. And so this is like one transaction, but the idea is, of course, that paper chain has many different users that want to borrow money, and so for each one of them, they deposit these and mint these NFTs and deposit these NFTs. There are oracles that then help with pricing these NFTs and sort of provide this value of what the CVT token should be worth as a price feed to the Maker system. And then when Maker system gets additional CVT deposited, they can draw additional DAI from, or Tinlake can draw additional DAI from the vault that it can then make available to the borrowers of paper chain. So paper chain can then withdraw that DAI and send it to the the labels in place of either in fiat or in DAI, of course.
So from
so this gives yeah. Go ahead.
I was gonna say, so from a risk assessment perspective, it's almost like you're doing two collateralized loans. Like you guys are doing the risk assessment for the NFT itself, and then the Maker protocol has to do a risk assessment on built on top of yours that includes like the CVT, right? So it's really interesting. So you guys basically collateralize and issue a token, and then that token is used. So it's like almost like a double CDP, but that's kind of the cost of doing business, right?
It is. So the thing here is, right, that for Maker to underwrite every single NFT would be quite complex and not something that you would necessarily want to include in your governance process. So the thinking is, instead of so what the paper chain does instead is it provides a framework saying, this is how we underwrite our assets. This is the process. We have these oracles as data sources. They go into this initial underwriting of the individual loans. And then we compile this portfolio, and then Maker underwrites the entire portfolio in this process, as opposed to trying to underwrite every single asset. And so this is how we can basically scale the governance process, and how we can scale this entire process to be able to do that for many loans, without going through some like complicated governance process with an MKR vote, worst case, right?
Yeah, that makes a lot of sense.
Within Maker.
So are CVTs something that anybody in the public can participate in? Like, let's say hypothetically, the Maker protocol creates a CVT type 1 like vault, and a user of this vault gets liquidated. Now, anybody can kind of do. Well, I'm asking, can anybody participate in the liquidation, and who is basically paying out CVT holders once they like buy liquidated CVTs? Is it you guys?
So this like gets very quickly into like the legal details of like the individual asset types, and so it depends on the asset. But in general, the way this works is that there's so these assets, their value comes from the fact that there's a legal claim on the company, right? So like in Paperchain's instance, there's a claim on the revenue that Spotify is going to pay to the label, and that basically, if they don't repay their loan, then you can sue them for that money, and Spotify will be forced to pay you instead of the label. And so our legal system today, sadly, is not really crypto friendly enough that you could just do all of this in smart contracts. So what is sort of coupled to every single deployment of Tinlake is a legal entity that sort of manages these contractual obligations, that ensures that anyone that holds CVT can then has a legal claim against the revenue that comes from this NFT. So you can sort of think of this legal entity as an analog to the smart contracts. It has contractual relationships with the individual labels, where like each loan that NFT on chain, like sort of this NFT on chain, moving it into the escrow account is a contractual like transfer of the debt of this, or sort of creation of this debt towards this entity. And then on the other side, the CVT token that is minted is a debt of this legal entity to the CVT holders. So there, depending on what country and what kind of asset, there are different like securities law situation. Of course, I think is maybe a little bit out of scope for this call, but of course, like we'll like elaborate more as we go through like the process of like setting this all up and involving the governance community in it. But basically, the idea is that then you can this thing is a legal claim that holds up in court.
So depending on the type of CVT, you expect like some CVTs to be able to function in public markets, and like other CVTs to be the subject of more like whitelisted markets, where like predefined parties who actually have the ability to be identified in the legal system and participate in the whole recourse process to be able to interact with these CVTs, right? But you do expect there to be kind of like publicly publicly interactable CVTs as well, or is that kind of maybe it obviously depends on the asset, right?
Yeah, it depends on the asset. I mean, obviously, long term, that's the goal. I think there's the law in the U.S., the securities law in the U.S. is pretty clear on that being quite hard.
Yeah.
And so in the U.S., it's actually not that hard if you're being a qualified investor and sort of doing KYC is actually it like takes an hour. There's some rules around it. Of course, you can't do it completely anonymously and things like that. But so like it's even as for American assets, you could see this being a fairly publicly traded token. It's not a publicly traded token, but a token that would be available to the public. And so in other countries, the securities law chain differs, and it might be actually harder or easier. And so it depends on case by case. But for paper chain, we're going to be publishing more information about what the exact legal details are. And I'm not a lawyer. I've probably already spoke way too much that is on that topic that I don't really know enough about myself. But yeah, so our legal team and I think also together with there's a lot of feedback from the Maker Foundation's legal team on how we can structure this in the safest way possible, meaning ensure that the CVT token have a rock solid legal standing and have and are actually worth something. So yeah, so we'll publish like that, or Paperchain will publish a lot of this when we sort of start with the more formal governance proposal. Hopefully coming soon.
Got it. By the way, anybody who has a mic or is interested in asking a question, definitely feel free to use the chat. I'm happy to read out your questions for you if you guys are shy. But while you guys do that, let me ask another one of my questions. So I understand that Centrifuge, Tinlake, and people like Paperchain, like this group of orgs has each its own function, right? So I know that Centrifuge has something called Centrifuge OS, while Tinlake I think is focused more on the smart contract side and the technical implementation of like this whole system. And then guys like Paperchain are the borrowers, the people that are connecting like the real world assets to your system on that is Tinlake, right? So can you talk a little bit about the difference between like what Centrifuge does, what Tinlake does, and yeah, just mainly that connection right there.
Yeah.
Yeah.
Right.
Leah, do you want to go ahead? I can talk briefly about just
say that I would see Centrifuge and Tinlake as complementary. So we started out building the Centrifuge protocol, which where we have built a peer-to-peer layer that enables companies to exchange financial documents, such as the synthetic receivables that Paperchain is handling, and through that they can actually tokenize those assets, so like bring them on chain. And then we started out building that, but then we had those NFT and and then on the other side, the lending protocol, but we had this missing link of connecting those two, and Tinlake basically represents that. So like using those NFTs, or like actually, being able to bring them in a standard, in a format that can be dealt with from the lender side. But
got it.
Feel free to add, Lucas, here.
Yeah, no, that's nothing to add. I think the thing we did was sort of we built Centrifuge for like layer by layer, and like so the first thing is we have to have a way to like scalable send data between different entities. So for example, as Paperchain like interacts with Oracle providers or underwriters that want to price these assets, there needs to be, you can't like write like kilobytes of invoice information onto Ethereum, right? Like this just doesn't scale. And so we've created this peer-to-peer network that allows you to do so securely, meaning that you can attribute like these off-chain transfers of information to like sort of what is to the assets that exist on chain, and this is what allows us to like mint these NFTs that have verifiable information, pricing details, and things like that attached to them. And then we take these NFTs and Tinlake sort of takes it from there, where like you can now create these portfolios of assets that can be used with like Maker and other lending protocols to actually finance them.
Got it.
That's a good summary.
So I know one big elephant in the room with like NFTs and using them even indirectly in the Maker protocol is the question of oracles and how you guys sort of gather the appraisal value of any given like asset verifiably and trustlessly and in a way that people can't like mess with those values. I know for public assets like Ether, it's a little bit easier because you have like pricing data available on a lot of independent places, so you could use something like a medianizer system that just grabs a set and takes a median. But what do you do with more, I guess, less liquid assets that might not have so many sources of price appraisal or like price information?
I mean, this is it's I didn't think this is a reality that we can change. Those assets obviously don't have as liquid of a market. There's this really I don't think we can change that. What we've done sort of everything we can to have as much of that information available on chain and verifiable in a cryptographic way, so as trustlessly as possible. And that's like sort of the start. The idea is to like have many different. So where we see this going is to have obviously Oracle providers that can audit sort of the status of this legal entity. So we call this like the provenance Oracle, and sometimes it's ensuring that that's an independent third party. This could be, for example, an accounting firm, verifies that, or multiple verify that there is a legal recourse for these tokens, that the process is followed, that these assets exist. You can work with credit rating agencies that are willing to attest to like the existence of the actual customers. We can have people stake some sort of asset. So what we're working on in the next iteration is that we can have underwriters put up some sort of stake that gets slashed first, or sort of where first losses are taken out of, in case there are any losses, to like further ensure that these assets are always making a return for Maker. And so there are things like that that we are adding to make this safer. I think that the one thing though to think of is, if you look at these, I mean, those are not new products, right? Like invoices have been financed for many decades, or probably more than that. So it's not it's something that the traditional market has a pretty good way to price already. And if you look at interest rates in these asset classes, they're somewhere between 5 and 15%. And so if you now like so that means that a bank that borrows that lends money against a set of invoices, if they can lend you money for 5% APR, that means there's a default rate of way less than that, right?
Right.
And so as long as we can sort of build a system that's not worse in risk, I think we're adding an asset to Maker that is extremely dollar stable. So it secures the system significantly compared to the more crypto correlated assets, and at the same time is like with keeping an interest rate similar to what was seen in today's world actually is safe and a sort of a profitable investment or collateral for Maker.
Yeah. So what I hear you saying is that ultimately it boils down to like the risk assessment, and it's, you know, understanding the asset from the risk side helps inform the interest rate that you would end up charging to cover any expected losses or things like that. Yeah.
Yeah. So and I actually say that there's like two questions. Brian asked if the assets are underwritten by the company or the community. So I think that's the goal, is that we don't have to have the Maker token holders underwrite every single asset, but that there is the loan originators, sort of for example, Paperchain would be doing that, right, on an asset by asset basis. All of this information though happens on chain. So like the individual decision to give one loan an interest rate of 7% and a different loan an interest rate of 8%, when Paperchain does these decisions, that's all on chain. And so like there was a decision from us is like we could have done all of this off chain and like had Tinlake, like not build Tinlake and just have a simple ERC20 token and say, oh, like there's some magic happening, or like there's a legal entity that does all this. And we wouldn't have had this advantage of having all of this auditable and sort of enforced on chain. So like Tinlake pushes as much of that on chain, but it sort of allows the Maker and other lending protocols to like make a lending decision or decision of whether to accept that collateral based on the entire portfolio and not just the not every single asset. And so you have both, right? But that means you can also at any point in time Maker can fully audit what's going on behind each of these collateral pools.
Right. Nice. That makes sense. Cool. What was the second question? Are Tinlake users, so Akiva asks, are Tinlake users concerned about interest rate volatility in Maker?
I mean, the interest rate volatility right now would probably be a bit of an issue. I think the goal though is that it should stabilize. I think, right? That David, that's not a especially also I think the interest rate with ETH, for example, would be very different than the interest rate volatility with those assets. If they're relatively dollar stable, these assets, and the risk doesn't change significantly, then I think the volatility wouldn't be a big issue. In the end, if Maker were to decide to charge an interest rate, a stability fee that is too high for those assets to be worth it, then yeah, it would force Paperchain to take those assets out of Maker and try to find other investors that would fund these assets.
Right, exactly.
But,
ultimately, it depends on the risk assessment, and if like nothing fundamentally changes, like it really does depend. Firstly, on like the asset itself for the stability fee variability, and then secondarily, it relies on the monetary policy decisions of MKR token holders, because in each stability fee, there's kind of two components. There's the risk premium, which is based on the risk of the underlying asset, and then there's also the kind of the global stability fee, which is meant to it's actually right now it's 0, but it's gonna be used in the future to kind of adjust stability fees globally in order to kind of coincide with DSR adjustments. But that's a whole different conversation. So there is some base like variability that's not based on the underlying risk of the collateral, but most of it is. And the expectation is that the very lower end of that stability fee is going to be purely for like DSR, or for, that's not covering only risk premium. Yeah. Nice. So, all right, we went a little bit over, and totally happy to do that because this was a really interesting conversation. But I'm gonna give it a couple more minutes to see if anybody else has any questions, and also maybe I might have one more question. I have so many questions. So what's like the most common question you've received about the project from people trying to understand it?
I think it's one that luckily we've already covered, which is, like how do we make sure that this NFT and this this ERC20 token that they're actually worth something. And so it's this it's working with lawyers who make sure that this is a legal structure that works, working with Oracle providers that can audit this legal structure and sort of price this. And so those are like the steps you follow. And I always bring this argument that, well, like if banks today do these SPVs, these legal structures to manage like sets of collateral, like there are probably like millions of these legal entities out there in the world that like hold assets for different kinds of portfolios, and then there's like some security issued against it that you can buy to have an influence or like an ownership stake in that money. And so that's a fairly traditional structure that we really didn't have to adjust much to make it work with our ERC20 token and their NFTs. So that's the goal. And of course, this is like not where I see this, where I hope this world is going in 10 years and 20 years from now. But sort of this is like this this in-between solution that we're using right now. And as we can move more and more of that into the on-chain world and less reliant on the legal system, of course, the better. And so we're like working on like finding ways that we can reduce the surface of the legal system in this entire thing. But yeah.
Right on. And you know, I to your guys' credit, you know, the main key here is like transparency and understanding like the entirety of the system and making sure things are auditable, right? And you guys do a great job in your write-ups, especially around like the pilot programs that you've been running with us and just how your system works. Like reading through the blog post, you guys are wonderfully thorough in explaining all the stakeholders, all of the roles. So I'm really glad that you guys are working on what you guys are working on, and I look forward to seeing what you guys develop into in the near future. Oh, Soren has a great question. So why the name Tinlake?
Tinlake, I don't know. We needed to give it. It was called POP in the beginning, Payment Obligation Pool,
Okay.
but that didn't sound like a good name either. And so at some point we just like picked a random .com domain name one of my co-founders had lying around that somehow like made sense. As is like it's just like we think of like tin Tinlake. I guess is like two sides of it. Like you have the borrower and the lender, and you have like the individual things that get put in, and then you have like this whole pool of assets that the investors invest in. But
we wish we had a more creative story to that, but
yeah, why Maker?
Well, the problem with BitShare. Well, we came from BitShares, the BitShares community, and their big problem was the lack of liquidity providers and market makers. So when Maker was conceptualized and started being built on ETH, the idea was to build it in such a way that it would attract market makers, and so
Okay.
that was kind of one of the inspirations for that name. And actually, if you ever noticed, the M is actually an order book. So this is like the buy and sell. Like if you think about the logo of Maker, it's actually also like very, very related to the market.
That's a good story. Cool.
Well,
Didn't know that before. Thank you.
Yeah, my pleasure. Yeah, it's like little bits of history sprinkled all around Reddit, and I get to tell people about them. All right. Well, thank you guys so much for coming on the call. I think it was super valuable to me, and I hope it was super valuable to the people that will watch this on recording and who were here live. So thank you guys. Appreciate it.
Thanks so much for having us. And I guess we can only encourage everyone to ask questions, because I think this is the most helpful also for us to touch upon topics that maybe we haven't thought of. So please reach out and ask all the questions you might have.
So where can people reach out? What are the handles?
Twitter probably, but also Telegram. I'm in the DeFi group, in the Telegram group, or email. I can maybe
just post it in the chat.
Yeah.
And I'll add it into the agenda doc so people can see it from the recording. They can find your info. Right on. So I'm gonna post the rest of the agenda, well, the actual agenda doc here in the chat for you guys. You guys can follow along. There's links to everything. So in the last 15 minutes of the call, I'm gonna cover a few different things. So first, I'm gonna go through governance, what's been going on in the land of the Maker Protocol's governance community, and yeah. So the TLDR is this: the governance security module vote that went out on, I think, Friday has not passed yet. There's currently 51,000 MKR on it, and there's 119,000 MKR on the previous proposal, the governing proposal. And if you're curious how a proposal gets passed, simply a new proposal has to surpass the old proposal in MKR weight. So at the moment, we're still waiting for the governance security module vote to go through or not go through. But this week we've been having a lot of conversations about the trade-offs of what it is. So if you've been following kind of the story, last week, one of our community members, wonderfully smart guy, Micah, posted a Medium article outlining the fact that the governance security module delay is currently set to 0. And so in my own opinion, I think the article was a little bit too sensational, because it was like our engineering team and our risk team set it to 0 and communicated about it publicly, and did it with a very clear intention. Uh, that that being, if there are any actual bugs or technical issues that need to be fixed, if there is a 24-hour delay and we submit a patch, and it has to go through a 24-hour wait, that's a 24-hour window for somebody to reverse engineer the patch and perform an exploit, possibly. So that's kind of like the risk of having the governance delay at first. And actually, I don't know if I explained what the governance delay is, but any action passed through governance, it would go through kind of a delay before actually being enacted. So if a stability fee were passed, then it would go into effect 24 hours after the vote was ratified. So that's all we're talking about here. So right now, there's a bit of a conversation going on back and forth about the trade-off for creating the delay. But our engineering team actually came with a nice compromise that created an exception for the Oracle security module delay not to be affected by the governance delay. And I know this is a lot of jargon for some of you guys that aren't like regularly uh, in the Maker universe. But regardless, ping me if you're curious to understand the deeper issues and what we're actually talking about here. But yeah, so the current executive vote is to activate the GSM. That's still up. There's 3 governance polls that came out on Monday, yesterday, and they're going to end on December 19th at 5 p.m. UTC, basically right before the governance and risk call. They're going to conclude. So the 3 polls are for the size stability fee, the DAI stability fee, and the DSR adjustment. I think the winning numbers are actually to keep everything the same. And I think for the DAI stability fee and the DSR, I think the current winning vote is for them to be the same. While the size stability fee, I'm actually pulling up. The last time I looked at it, the winning vote was actually to raise it from 3% up, since now we're not suffering from a bottleneck of people migrating from side to DAI. There's actually a lot of liquidity in the migration contract pretty regularly now. So if you're a CDP holder on single collateral DAI and you've been looking for an opportunity to migrate into an MCD vault, actually this is a really good time to do it, because there's been a consistent high amount of liquidity in the migration contract. Yeah, so for the PSI stability fee adjustment, it actually looks like now 3% is winning. So all of the current rates seem to be staying. So there seems to be kind of an equilibrium where all of our parameters are set right now based on the opinions of the MCAR holders. Okay, so the summary of this last Thursday's risk and governance call went up on Sunday. So you guys could check that out. If you don't have an hour and a half to watch a governance call, you could spend 10-15 minutes kind of going through this very neatly bullet pointed summary with a ton of screenshots and video anchors if you are curious to watch any specific point. So that's up. You can also visit the governance at a glance thread, which is like a snapshot of all of the conversations happening in our governance community right now. And actually, I kind of want to share my screen really quick and show you the thread, because I think it's really useful for some people. And Lucas, I'm really sorry. I'm going to have to mute you because I'm getting a little bit of background noise from you. Yeah. All right, cool. So I'm going to quickly share my screen. And I'll show you guys the thread, and I'll basically give you a rundown of its format. So you should be able to see my screen now. At the very top of the thread, so this thread has been running since July 7th. It's constantly being updated, as you can see. But the very top includes like a 3-point summary of just like a quick snapshot of the current state of things. We have a few different categories, one being active discussions, and these are kind of like meta questions about the direction we're going with various things, like, there's more clarity that is needed on emergency shutdown and the risks involved with that. There's a conversation on ranked choice voting versus multiple choice governance votes. There's ideas that are constantly being brought up this week we're talking about, and actually this has been a conversation that's been happening for a few months that hasn't had a thread, but thinking about the incentives to get people to participate in voting on the Maker protocol these are kind of the active discussions that are happening this week. We also have some consensus threads. So these are actually threads that are looking for signals. So they ask a question, and there is usually a forum poll that goes along with it. And that's how we kind of figure out what people's real opinions are in regards to a lot of the things we're trying to figure out about our policy, how we change various parameters and things like that. So you can check out the signal request threads, the seeking consensus threads, and there's also a bunch of ongoing initiatives. So we have like an official welcome thread now. We have a forum navigation index, which helps people kind of very easily look for what they're looking for. We have a suggested signaling process. So these signaling threads kind of go through a standardized format that we've decided as a community works best for streamlining the issues and for keeping things on track. And which has been actually recently updated to make sure that the original poster is in charge of seeing through the thread to completion. If they're they're basically responsible for keeping the thread alive if they needed be, and then like providing a TLDR of the conversation and things like that. There's also a systemic risk directory, which it's collating the various systemic risks identified by members of the community. Is everything going to explode in the future? Click here to find out. Yeah, so these are like a collection of threads that that go through, I think, different risks. Oh no, it's not a collection of threads. I should probably read up on this to to know exactly what that is, because I'm a little confused about what that is. And then just some stuff on the horizon, more longer term conversations that are going on. And the one that's going on now is consensus decision making versus plurality voting. Uh, and so yeah, tons of activity are going on, and I highly recommend if you're an MKR token holder to jump in. And you don't have to participate in all of these conversations. You could participate in the things that you find that you yourself have the most insight into, that you could contribute to the conversation, and hopefully lead MKR token holders to make correct decisions in regards to whatever that might be. So definitely come check out our thread. I think we got 5 minutes left, so I covered everything in governance. Oh no, I didn't. Yeah, so sorry. The signaling guidelines for the forum, they've been updated, and the poll that is basically just like I've read this and kind of agree if I create a signal request thread to follow these guidelines. It's kind of opt-in, obviously, but they've been updated a little bit. So if you're a forum user, definitely check out that thread again, and you know sign the poll if you agree with the updated guidelines. Long for Wisdom posted the exact things he changed as a comment on that thread, so check that out. So I'm gonna quickly run through some of the other stuff. For partnerships, we saw DeFi Savers Smart Savings page. It now supports DSR alongside Compound, DYDX, and Fulcrum. So you guys could use that as a way to optimize your yield on your DAI. We also saw OKX becoming the first major platform to integrate Maker's DAI savings rate on their user balances. So if you're an OKX user, you actually by default are earning 4% or whatever the DSR is at the time on your balance. So that's really cool. It's actually what we expect a lot of platforms, centralized and decentralized, to be doing with the DSR, which is really, really cool. But anyway, moving forward. Highlights from the community, really quick, last few minutes. Andrew Redden got his swag box. So if you guys don't know who Andrew is, he's actually the community member who officially like submitted the TX that launched MCD. We promised him a box of swag, and he got it. And it looks like Coulter hooked him up with quite a lot of stuff, which was great to see. Also, we saw this week, actually, I think yesterday, somebody in the community used the public call on the vow to heal the vow balance. So I know this is jargon, but the vow is basically like MakerDAO's, the Maker Protocol's internal balance sheet. There's like a surplus amount and a debt and a deficit, a debt amount. and anybody can call heal at any time, and those two values square off. So at one point we saw, I think, like 10,000 in the debt accumulating, and this is accumulating because people in the DSR die in the DSR is being paid a yield. But somebody publicly called it and like squared out the amount. So that was really fun to see, and it all happened in Maker Chat, and like people were explaining how to do it. And if we had a little more time, I would go into the incentives of who actually does this public call on a regular basis and why they would do it, since it doesn't actually pay you anything. It just costs you like 6 or 7 cents. But yeah, we can get into that on another call, maybe after the New Year's. So some developer creations. There was the DAI token developer guide that our team put out. Nexus Mutual created a Twitter bot, so you can actually see people getting coverage for their vaults, insurance coverage for their vaults, kind of live on Twitter, which is either scary or really cool. I haven't decided yet. I'm leaning towards really cool. Oh yeah, I mentioned this already. DeFi Saver updated their smart savings dashboard. Oh yeah, and then Alex Van de Sand launched a GitHub repo called Much Clearer DAI, and it's not a fork of Maker or anything like that, but it's a repository that copies the code and tries to rename the variables into more accessible terms. And so yeah, you guys can check that out. And by the way, if you are a developer and you're trying to read the MCD or Maker code in general, if you use this tool called Hypothesis, you'll actually be able to see annotations on the code and a lot more documentation than you would see without it. And you can also visit our new documentation like portal. It's called docs.makerdao.com, and it has all the documentation you could ever wish for on our entire smart contract architecture. So check that out. Ping me if you guys would like any additional information. But yeah, I'm gonna leave it there. There's a few other things that I haven't mentioned. Chris Bleck made a really cool video on the GSM vote. If you're curious to actually learn a little bit more about the trade-offs. And yeah, everything else, I'll leave it to you guys to check out the agenda and explore, but there's not much else. And we're at the top of the hour. So thank you guys so much for coming on the call. I hope this was super valuable to you guys. And oh yeah, maybe one more announcement. Next week and New Year's, there's not going to be a community call. So the next community call is going to happen on January 7th. So I think this is like the longest that we're going without one. But yeah, next 2 weeks, no community calls. So thank you guys so much. Take care.